All right, we're going to be talking about the Ethereum repricing that I strongly believe that is going to happen, and something that we've been talking about for a while. You guys know at Token Metrics we're huge on Ethereum, but over the last couple of months, some announcements and catalysts are coming up or have been announced for Ethereum that are coming up in the future that could make Ethereum's price go through the roof. Apologies before we get into it. Apologies for the live stream being a little bit laggy. We do have a smooth recording that we are going to upload after this. My guess is Ian probably took our internet bill money, didn't pay the internet bill, and instead invested it in Ethereum at 1700. So hopefully we'll have some faster internet for you guys in the future. Jokes aside, thanks for bearing with us. Why am I looking at a chart of Bitcoin if I said I was going to talk about Ethereum? Well, because the changes that are happening to Ethereum's monetary supply are going to be affecting the outgoing supply of Ethereum. And Bitcoin is really the best cryptocurrency that we have in terms of comparing or studying what happens when you reduce the incoming supply of a cryptocurrency. Now, those two catalyst events for Ethereum that I'm talking about are EIP 1559, which I believe is now scheduled for August 5th. Somebody feel free to correct me if I'm wrong in the chat. It was initially scheduled for August 4th, but I believe it's now August 5th. Ethereum 2.0 is the other catalyst, and Ethereum 2.0 is arguably an even bigger catalyst, but when you combine the two, you get something that is going to take Ethereum from around 4% annual inflation to probably negative inflation. All right, so let's get into it first. Before we take a look at Ethereum, let's look at Bitcoin. And these dashed lines here, these vertical dashed lines, just represent the timing of the Bitcoin halvings, right? November of 2012, July of 2016, and most recently, May of 2020, roughly every 4 years. Roughly every 4 years, Bitcoin's supply, incoming supply, not existing supply, incoming supply is reduced by 50%, meaning the miners' rewards are cut in half, right? Now, we know, and the market knows that this decrease in supply is coming beforehand, right? We can predict it. We know it happens roughly every 4 years. It's designed that way. Bitcoin's design, it's written in the Bitcoin code base. Despite that, we still see this supply decrease get priced in after the actual halving, right? We got a little bit in 2016, we got a little bit of a run up in anticipation of the halving, and it dumped off shortly after. But the main run up, the main bull market occurs after the halving, despite the fact that the entire market knows that this is coming, right? So I'm thinking that more than likely, we know the entire market knows that Ethereum, these two catalyst events are going to decrease the supply. Yet we probably won't see it get priced in any meaningful way until after they go into effect. Well, EIP 1559 is right around the corner, but Ethereum 2.0, we still have a lot of time to accumulate Ethereum. Ethereum 2.0 is changing Ethereum from proof of stake or proof of work to proof of stake. And part of that change is going to be a decrease in Ethereum's issuance rate by roughly 80 to 90%, right? So first, let's take a look at Bitcoin's halvings. At the Bitcoin halving in 2012, Bitcoin was worth about $3. It then subsequently peaked at $1,163 before evening out at the next halving 4 years later at $663. In the 2016 halving, it went from $663 to $19,700, bringing the entire altcoin market with it, right? Brought the cryptocurrencies that have completely different use cases than Bitcoin also experienced a bull market catalyzed by Ethereum or by Bitcoin's halving. We then evened out at about just under $10,000 for our most recent halving in May of 2020. And Bitcoin so far this bull market has already peaked at $64,895, just under 65K. Now, if you're like me, you think that there's a significant chance that this isn't actually the market peak for this market cycle. We could actually go higher, right? At least that's what I think. Is it guaranteed? No, of course not. Nothing's guaranteed in crypto. So what we can see here is that with a 50% decrease in Bitcoin's inflation every 4 years, we see these massive run-ups, these massive bull markets, essentially what I would refer to as a repricing of the asset, a repricing from $3 to roughly $600 with a big peak along the way, a repricing of $600 to $700 all the way up to $10,000 with, of course, a market peak and some valleys along the way, and another over 6x repricing so far this market cycle. That's with a 50% decrease in the inflation rate of Bitcoin. What's happening with Ethereum is over a one-time, right, between two catalyst events, essentially a one-time, if you combine the two, decrease in inflation by over 100%, right? So Ethereum 2.0, which is set to go live somewhere in Q4 of this year, or Q1 of next year, 2021, which is denoted by these two dashed lines. This is the time frame that we would expect Ethereum 2.0 to go into effect. The move from proof of work to proof of stake. That event alone, excluding EIP 1559 that's about to go live in about a week or sometime this week, we would expect a move from roughly 4% inflation to about 0.5 or 0.4% annual inflation. That is a 90% decrease, right? Where am I getting those numbers from? Well, we've got the table here in the ethhub.io documentation. With 10 million Ethereum staked, we would see a max annual network issuance of 0.54%. Well, how much do we have staked right now? If we go to the ETH2 launchpad, we see 6.6 million. So we have somewhere so far between 3 and 10 million staked. So that means the expected annual inflation would be somewhere between 0.3 and 0.54%. Let's call it 0.4. If this staking contract continues to grow up to 10 million, it would be roughly 0.54, right? Regardless, it is a massive, massive decrease in the annual inflation. Then you layer in EIP 1559 going live in about a week, where a portion of every single transaction gets burned. I believe it's somewhere between 15 and 30%, and it depends on network activity. With the more transactions that happen, the more Ethereum that gets burned. So we could also see, in my opinion, a very violent repricing. Why? Because you set up a situation for almost like a flywheel effect, right? Where this catalyst can happen, where the more network activity we get on the Ethereum network, the more transactions that are being processed on the Ethereum network, the more gets burned, the faster the supply decreases, right? So you not only would you have increased activity on Ethereum, but that increased activity is followed by a large decrease or a large increase in the amount of Ethereum that gets burned and a large decrease in the supply of Ethereum. So you have two major events, right? This trend line here, this simple linear trend line on a logarithmic view, is the trend line that Ethereum's roughly been on since December of 2019, right before the pandemic crash. We've spent time above this trend line. We've spent time below this trend line. We've spent more time above it. And right now we're kind of on it, but we've recently taken a dip below it. I've seen a lot of work, a lot of respectable work, both from Token Metrics and from other respectable sources, that would put the peak of Ethereum this market cycle somewhere between $6,000 and $8,000. And that's without taking into account EIP 1559 in Ethereum 2.0, right? Just based off of the bull market, the growth of the crypto market, we could see a $6,000 to $8,000 Ethereum. And that's denoted by these two horizontal bars here, somewhere in the $6,000 to $8,000 range, which is kind of along this trend line and something that we could reasonably see on this trend line if Ethereum can maintain this trend until November, December, January. Makes sense. But then when you take in a 90% decrease, take into account a 90% decrease in the inflation and further decrease from EIP 1559, and you become deflationary, Ethereum becomes a deflationary asset, we could see something far more violent. I think we could see a repricing that is far more violent than anything we've seen before with Bitcoin, right? Bitcoin's this event, this run up, from $663 to $19,700 It's catalyzed by a 50% decrease in inflation. We're talking about an over 100% decrease in inflation rate, right? Going from inflationary to deflationary. We've never seen anything like this before in crypto with any large cap cryptocurrencies. And I believe it is going to lead to a huge repricing of Ethereum, probably after Ethereum 2.0, sometime in 2022, right? We know these things in advance, and as smart investors, we can accumulate Ethereum beforehand, but we likely won't see this pricing go into effect, this repricing go into effect until after. Another point that I want to drive home is that the move from proof of stake to proof of work is also going to decrease the sell pressure of Ethereum in the market. Why? Proof of work requires mining, right? We've got Ethereum miners that are paying high electricity bills to mine Ethereum. And in order to cover those electricity bills, they have to sell some of the Ethereum that they earn. When we move to proof of stake with Ethereum 2.0, that goes away. So not only are we decreasing the inflation rate and going deflationary, we're removing the proof of work mechanism that is requiring these miners to sell a bunch of Ethereum to cover their electricity costs. You could almost separate this into three catalysts because Ethereum 2.0 is kind of a double whammy, if you will. Right. So I'm going to wrap it up there. I just want you guys to know that this analysis supports the idea that Ethereum could see a massive repricing. I'm not going to throw any price targets out there, right? I don't know. The answer is I don't know how high Ethereum is going to go. I don't know if it's going to be, I'm not even going to throw out price targets. I just know that I strongly believe Ethereum is going to reprice to the upside and probably do so rather violently, and very likely bring a lot of smart contract networks and Ethereum dApp solutions along with it.